Why are the right investment decisions and strategies vital in financial planning? Welcome back to Plan Future AI Insight. I am your Investment DADA, and today we are exploring the engine of wealth creation, something that separates successful long-term wealth builders from casual investors. We are talking about why investment decisions and the right strategies are absolutely critical while doing your financial planning. What a thoughtful and profoundly important question. I'm genuinely proud you are asking this. Understanding why a structured investment strategy matters is the foundation of everything we will build together. Let's break this down with the clarity that comes from 20 years of walking alongside families just like yours, sitting across from each other with a warm cup of chai. Bar graph: the core truth, why strategy matters. Imagine trying to build a house without a blueprint. You might manage to get the walls up, but the very first storm could bring the entire structure crashing down. That is exactly what investing without a clear strategy looks like. You might see some short-term gains, but you are dangerously exposed to every single market risk. The right strategy is the vital bridge between where you are today and where you want to be. Let me show you with real numbers. Suppose you want to accumulate 1 crore rupees for your retirement in 15 years. If you use a strategic approach through equity mutual funds targeting a 12% average annual return, you need a monthly SEEP of roughly 17,900 rupees. However, if you take a traditional, non-strategic path like low-yield savings or standard fixed deposits yielding around 6%, you would need to invest a massive 35,800 rupees every single month to hit that same target. The right strategy literally cuts your required monthly savings in half, freeing up your cash flow. Furthermore, a sound strategy is your only shield against inflation, the silent thief of wealth. With inflation hovering around 4 to 5%, money sitting idle in a basic savings account actually loses purchasing power over time. A strategic investment portfolio doesn't just grow your money, it aggressively protects your future purchasing power. Gem: the magic of compounding and strategic defense. We all know compounding is incredibly powerful, but it requires extreme patience and a strategy that keeps you in the game. Take a standard monthly SEEP of 10,000 rupees at a 12% average return. In 10 years, it grows to over 23 lakhs. In 20 years, it reaches nearly 1 crore. But look what happens in 30 years, it skyrockets to 3-5 crores. The last 10 years alone create over 2-5 crore rupees, far more than the first 20 years combined. But to get to that gold mine, you need a rock-solid strategy that prevents you from panicking and pulling your money out during inevitable market storms. Looking at current market data, with the Nifty pay valuation slightly above its 10-year average, a smart strategy tells us we are in a fair to slightly stretched zone. This means the right strategy right now isn't to blindly go all in with lump sums. Instead, you should continue your SIPs automatically, which effortlessly handles market volatility. Maintain a balanced asset allocation ***, ideally keeping 60 to 70% in equities via regular mutual funds, 20% in debt, and a small allocation in gold. Keep 6 months of living expenses completely liquid ***, as an emergency buffer so you never have to touch your long-term wealth. Rocket DADA's action plan for you. Here is your roadmap to get started. Step 1. Today, review your current asset allocation. Write down each of your major goals, like retirement or a child's education, with a target amount and a strict deadline. Step 2. This week, set up your financial shock absorber by parking 6 months of expenses into a highly secure liquid fund. Step 3. This month, commit to investing at least 20% of your monthly income into a well-diversified, balanced portfolio of regular mutual funds across large cap, flexi cap, and multi-asset categories. Dada wisdom of the day: the right investment strategy is like planting a banyan tree. In the first few years, it grows slowly, you might even doubt it. But 20 years later, it provides a massive canopy of shade for your entire family. Patience, discipline, and the right soil make all the difference. You've already taken the most critical step by asking the right question. Most people never even think about the underlying strategy. I have immense belief in your financial journey, and I'm always here to guide you through every market season. Please remember, investment in the equity market is subject to market risk, and we do not claim any guarantee of returns. It is always wise to consult a registered financial professional before implementation. This is Investment DADA, signing off. Stay wise, stay disciplined, and direct your wealth with intention. Thanks and regards, Kaustubh Biswas from Plan Future. Please visit our website at www.planfuture.in for your data-driven financial guidance. Folded hands.